For today. Today is June 7th of 2023. We did multiple trades in our main option trading account. You see the first trade we did was in AMT, and we are in a covered call and a cash secure put option in AMT. So we'll start with the cash secure put option first. So we bought to close the AMT June 16th $300 put. We rolled that strike price down as we rolled it out 1 month to the July 195. And then with the covered call, we did the same thing. We bought the June 16th of the $200 covered call and rolled that down to July and out to July 195. We did all this for a credit of $1.50 per share. So let's take a look at our chart here and let me show you why I decided to do that. So the cash carry put option and covered call option, they were up here right around 200. But with AMT recently showing weakness, making a new lower low about a week ago, I decided to go ahead and roll this down. It recently had a nice little advance over the past week. See, it went up around 6, 7, 8% over the past week, but it's now hitting up against that green 50 moving average on the daily chart. So I decided to go ahead and get this strike price rolled down just in case AMT were to decline between now and expiration next week. So now we're in a little better position based on how the charts are looking with AMT, and we'll see how the next month plays out. The next one is Bank of America. We did a similar thing. We're in a covered call and a cash secure put option of Bank of America. But the little bit of a unique thing here is that we haven't sold as many cash secure put options as we had covered calls. So the ratio is a little weird, made the order be a little bit weird. But basically, we rolled our June 16th $28 covered call options out to July 21st and up to the $29 strike price. And then the same thing with the cash secure put options that we've sold. We bought to close the Bank of America June 16th $28 cash secure put options and rolled that up the $29 strike price, the same expiration July 21st. Notice that we had 9 of those cash secure put options and we have 11 of the covered calls. So in all, we pocketed a net of $595 for this position minus the $14 commission. So let me just show you the chart briefly and show you why we rolled that up. So one of the main reasons is that over the past week or so, we see that Bank of America was finding resistance at this green 50 moving average on this daily chart. And in fact, that moving average has been serving as resistance for it going all the way back to the end of February. So now what happened is it broke out above it, and it simultaneously broke out above this high here from back on May 23rd. The high was right at a little over $29. So see, it broke through there yesterday, and today it held, and now it was tested here. You see the little leg, see it was tested. And so now it looks like Bank of America might want to go up. It looks like the next area of resistance will be right here around 31 or so. Our hourly chart, we see that it's trading above both the green 50 and red 200 moving averages, so that's looking bullish. Over here on the weekly chart, we see that down in the volume section, the past month has looked fairly bullish. Before that, we had some bearishness, but overall here recently is looking bullish. So because of that, I decided to go ahead and roll this strike price up as we rolled it out. Our next trade was in DLR. And we did the same thing as we done with the other 2 trades. We are in a covered call and a cash secure put option in DLR. And so we rolled those options. So we bought to close the DLR June 16th $95 covered call option. And here you see that we sold to open the DLR July 21st 100 call. So went out 1 month and rolled that covered call strike price up by $5. And then you see, as far as the cash secure put option, that we bought to close the DLR June 16th $95 cash secure put, and we sold to open the DLR July 21st 100 put. So rolled both strike prices up to 100, walked up for credit of $2.40 per share. So here we have our chart of DLR, and you see why I rolled it up. We were down here, right here, around $95, which was an area that was serving as support for earlier, back a month or so ago. But now, over the past few weeks, DLR has had a nice advance. We see it advanced about, looks like around 25%, a really strong advance here. But now let's retrace some. And so we got our strike price right at what should now be support. And indeed, we see today it is finding support there. It's also right around this green 50 moving average on the daily chart, right on this area that served as resistance for several times and support back here in March. So this area should serve as support for it now. But notice it is stuck in this little tight spot here between the red 200 moving average and the green 50 moving average. So we'll have to see how it plays out. But nice buying volume over the past several weeks, and with it breaking out above that 100 resistance area, I decided to go ahead and roll it up. Notice over here on the hourly weekly chart that it is also trading above the 200 moving average, so that's a bullish sign. However, down here on our weekly chart, we see that it's now hitting up against the green 50 moving average, kind of similar to the 200 moving average over here on the daily chart. But again, there's been nice buying volume, so we'll have to see what it does. This $100 strike price puts us right in the middle of the range that has been in over the past several months. I think it's been trading for a high of around 110 and a low down here around 85, so we're kind of right there in the middle on the upper part of that, but I like our position here. And then our final trades, just adding to the CHRW position we started a couple days ago. So we sold to open the CHRW July 21st, $90 cash secure put option for $2.10 per share. So pull this chart up here. Now, I was going to add to this yesterday, but pretty strong red down day yesterday, although it was approaching support. I thought to myself, let's just give it one more day to see if that support holds. And indeed, support did hold yesterday. Then today it got retested. We see it came back down. You see probably a little better over here on this hourly chart. Let's see, it tested that same area. And so after that, I decided to go ahead and add our position. So we still have plenty of room to add more to this position. We can still add at least one or two cash secure put options. We want to add this one slowly, just in case this area right here at 90 doesn't hold a support. Notice that there was big volume right here on 3 days ago when it had the big red candle, and also about a week and a half ago there was a big red bar, strong red candle. So we're being a little bit more careful here, but do notice that the volume declined. So yesterday the volume was lower than it was back on Monday, and today the volume wasn't as high either. So we'll have to see if it'll springboard off that support or maybe just trade sideways for a while. And if it does trade sideways and continues to look like it's going to find support, then we will look to add at least one more cash secure put option to this, maybe even two. So that's our trade for today. I hope you have a great evening.